Well, good evening, everyone. Hey, it's Shooter Scott Henderson, and we are going to go over some charts this evening, give you guys a little update, what's going on, what we see. Of course, at the end of the presentation, please do review our disclosure. So let's start off with the SPY. The S&P 500 ETF. I mean, we really are testing this 609. Or right, I think it was last week I said 605, 608, starting to beat our head against the wall here just a little bit. We did break out. I was looking at this flag right here, so we're above that. So we are bullish. We have some RSI divergence here. Challenging part for me when I look at this tape is I see us having an impulse here, which is a leading diagonal. So that means this is sort of like a flat. So maybe we get something like an ABCD pattern. So we get something like this up to the top. Makes sense, structurally works for the count that's there. Now I'm using an internal trend support. Basically I'm anchoring off of this 568, and I was using this. I'm going to switch it to this 591.89. So I'm looking at that as wave confirming trend support where our alerts are. And for those of you that don't know, my work revolves around Elliott wave and other technical tools that give me a roadmap towards the future. So what I've devised is a trend channel or trend support line that we can move into a trend and retain our position. So I'm just going to use this as a quick example because I want to really just repeat this till I'm blue in the face so everybody understands it and you do it. So ultimately, once we get our breakout, right, we get our back test. So our initial anchor for our major amount, and I'm just going to move this down for shoots and giggles purposes for you. So our initial anchor so you wait for your back test, and then you move your trend channel, and you set your alert until you break above this prior high, right? Now, at that point, you wait for your back test, right? And you're going to move it up. Now, be very candid in this count. I wouldn't have had it that tight. I would have left it in this scenario because of the breadth of wave two. I would want to give that some room if I've been chasing it since down here at this 508. I'm perfectly willing to get taken out at 545 if it takes me out. But however, let me continue. So in that scenario, we're now waiting for our next breakout, our next higher low. Then we're waiting for us to break out above. And then once we break down again, now this becomes our higher low in most circumstances. So the question is, was this worth getting taken out here? Initially, if you use my stop structure and set it where you reduce your position size by 50%, adjust your trailing stop down to 20% of your gain for the trade. So if you have $50 or $40 on, your stop is $4, just how you would adjust it, just a rough calculation on how you do it. Or you have been better off moving your stop here. Ultimately, we're taken out about at the exact same place. So my argument is it worked either way. But that's the structure. And I'm going to highly recommend that becomes the most important thing in managing your positions. Do it on a 4-hour chart. You can go out to the daily or do the weekly, but do it on a 4-hour chart because I find it to be a little more accurate as far as, where we can chase the uptrend. And then we want to avoid these flats because the reality is we could get a back test. We could roll right back over to this 561. In this scenario, I'm tightening up because we broke out above this high. So I would decide that I wanted to keep that position. So I added an internal trend line, and part of it was because it aligned with this wick, this gap that we had here. And, that to me was sort of confirmation. So we got 3 tags on the line. It was an important spot for me. However, I did tighten it up because I wanted to try and stay in the trade. And that was my thinking. So I decided to tighten it up to that point. Sort of have to fly by the cuff sometimes. All right, let's take a look at the NASDAQ. Actually just looks more bullish. I'm seeing this as a leading diagonal here. Same exact structure for the ABC because we got this aggressive push. So these are both leading diagonals, both in the NASDAQ as well as the S&P 500. Now, again, I'm using my anchor at 466, using that internal trend line as well. And I believe, where's my number? Okay, we're up at 523.65. That's my anchor. Now, looking at the Fibonacci's levels on this chart, be very candid, we could be looking at, roughly the 61.8 most viable target with this kind of an extension, because I'm viewing this whole structure as mounting. The only question for me here is this rolling over doesn't look done. I would much rather come back to this 505 range and then give us a launch pad to get off. This whole leg has just been very challenging to work outside of if you just bought it and held it, that kind of thing. So let me jump over to our names in fundamental trends. Now I'm going to start off with last week's. Now in chat, we added an entry on Hyatt, off of this breakout at 134. Second candle in, we're up about $2.50 on that. Our anchors we're using is 102 and 128. We did post that into chat for you guys. I tightened up to this number versus this wick off because we gapped and ran and we got kind of a solid general candle, not that full. So we'll see how tomorrow's candle is. We might reject here at 138, but ultimately I'm just looking for the 100 fib around 142. And then if we get above that, then we're looking towards that 1618. Now Tesla, basically, it was a buy the news, a sell the event thing on Robotech. Basically, you took your range of the day, our peak, which I'm not even recalling what time it came in. I don't think it was that, early in the day. I think it was by 1 o'clock. And then we basically gave everything back the next day, and then we're continuing lower. So to me, this looks like an ABC. So I would not be holding this for the long side at the moment, or I would be mitigating my risk because I'm looking at this as an ABC, even though it's fairly deep. Could be wrong, or a flat. Could actually build out a whole giant flag here. Zeta has now stopped. It didn't prior to me doing this video because we were actually, when I looked at this morning and structured up, we were still in there, but we gave it quite back. These rejected higher prices. There's a time to get bullish and then there's a time not. And that's one thing only years of experience teaches you, is that you just need to sit on your hands or walk away from the desk and not jump on board. Now, on the other hand, big skies, we alerted way the heck back at 998, and we alerted again at 1432, and it's just run. So right now, I've got we're actually going to move this up to the bottom of this wick. So we're using our anchors at 615 and then 1664. And I believe that 2054 is a good number, but we could roll over, which is one of the reasons I would be tight. We put in another red candle. I'm going to probably tighten it up because the likelihood that this retraces, and if I bring a fib up, if I could find the right tool. So, coming from this leg to our peak here. Wrong tool. I don't know what the heck I got there. There it is. Hopefully. So if that's our high, the most likely retrace here, just looking at the history of the tape from these launch pads, almost got a 78.6. So I would say off of this entire leg, equality, if that's it, because you got to realize this looks like an ABC to me. So when I look at the counts in the structure, I'm considering a couple things. One, the consolidation zone that happened between this 1285 and this low of 999, right? So it's kind of confirming to me that it's an ABC and it's not an impulse wave, but it still could migrate to an impulse wave because most of the time impulse waves will retrace at least to the 382 of the leg. So if we take another fib tool and we look at here, we didn't really, we did get to the 382. I'm sorry. It wasn't looking that clean for me as far as my vision. So we did take out the 382. So yeah, this could still be an impulse wave. But I think in either case, we either get to that 20 or we break down here and then we get back to the 382. So I get a better price to load up and jump on board there again. So that's sort of my thought pattern there. Just manage the risk using these trend support lines. So now looking at RKT, it hasn't stopped out because we didn't close below the anchor. So we have 1094 and 1440, but here's another name. And we're seeing this a lot now. I'm seeing it, whether it be in the Mag 7, whether it be in industrial, different sectors, semis. We're getting these pushes and then we're rejecting pretty decently. You're getting this push, then you get a nice rejection, and you get this flat build out. So there's a lot of confliction between buyers and sellers in my book. But it's not broken the trend. Target is still 1600. Once it breaks to go to 50%. Sorry, I'm going to move this down here right to my trend line because that's where our anchor is at this point. And to be honest with you, I probably screwed up. I should have moved this. If I'm not, and I don't get an alert, I don't actually go through these charts every day. I go through them for my prep for swing trade notes. I go through them Wednesday before the close, and then I go through them Friday. So if I don't get a freaking alert, I don't do anything because I just can't look at them every day. It takes too much time. So the rule is when you get a general, what a general candle is a candle that is larger than your average bullish candle, usually 1 3/4 the size of it or larger. You get a 3x type of size of your prior candle. That's pretty solid general. Typically they come in threes. So what you get is a really elongated candle, a smaller inside candle, but it still takes out the body of the second candle. And then you can get the third candle. So what I've learned is, we got one general candle here. So got the second general candle here. Right, so now what I'm going to do, once that third candle breaks above that prior candle, I am now moving my stop up to the base of the body of that third general candle, because I know the likelihood at some point it's going to retrace and take that out. And that is your highest conviction for a reversion to the mean. General, general, general. What do we get? A reversion to the mean. General, 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 general. What do we get? A reversion to the mean. So you have to look at the MO of the tape as well. So you make sure you understand that volatility of the tape you're trading, individual stock. Each of them have a different MO. That's my 2 cents. All right, so now we're jumping up to IBIT. Now, I put the alert out at 58.52 because I was expecting a break, and I was thinking we'd get at least up a back test 61.8 and reject. I'm expecting Bitcoin to run. I think this is our run to 125K, but I really don't like this noise because it didn't have as deep of a consolidation off of this. But there are things I like. I like convictions and pushes, and I like deeper flushes because it eliminates the sellers. The sellers get taken out. So you probably got quite a few people right here on this high who might start selling because they're not thinking drive 1 and drive 2 or drive 3 like I am. They're thinking, oh, well, I should have sold up here. I didn't sell here. I better sell here. That's just the fear of loss that comes into people. They all of a sudden, I better take profit. I don't like these market conditions, etc. But you can see it in the tape, how people react. And you look at this prior high. So we got our initial push, our first back test. We sold off on that. We got back up here. What did we get? We got a huge sell. The reason being is because we got up tied to the highs here, and everybody's like, man, I better take profit. And it's like herd mentality. It's almost like everybody got on a SIM message and texted everybody and said, hey, sell IBIT. And it went across the world. Yeah, I swear sometimes I think that's the case. Okay, well, that's what I got this week, folks. It's late. We're going to call it a night. Great trading until next time.